a lot of people are still talking about like, hey, do I get my K1s, cost segregations, and so on? And I'm pretty sure with the Biden administration trying to cut down on the jumbo depreciation. So
Yes,
how can you put some light on that to explain?
absolutely.
Okay.
Absolutely. So pretend for a second on one side, on your right hand, are these three tax codes, right? That I just mentioned. And on the left side, there are certain provisions, only micro provisions of these tax codes on your left hand, which are cost segregation and bonus depreciation, right? Now, I want you to think of it like big brother versus little brother. So all real estate investors, all accountants, all CPAs, it doesn't matter. I work with accountants in Manhattan and Los Angeles and Chicago. These are huge accounting firms. And despite their their prowess, all they're talking about is little brother strategies.
Hello, everybody. Welcome to REI Secrets Spilled, Fast Track to Riches. This is Sanjay Hegde, your host. And today I have with me Zak Shaik, who is an advanced tax strategist who specializes in pre-tax investing strategies for real estate investors and showing them how to triple their return on investment on their dollars. So, welcome to REI Secret Spill, Fast Track to Riches, Zach.
Well, thank you, Sanjay. Let me tell you, today will be the REI secrets that you guys or your guests and your audience have not heard before. I promise you that.
No, I am super excited. I had the opportunity to meet with you a couple of weeks ago at the thing, and you got, it was very impressive about every single thing that you talked about. And I just felt like a lot of people did not know. I don't know of a whole lot of people who know about this, right?
Nope,
And
they don't.
we keep talking to so many tax strategists and so on. But what I heard from you was like amazing, and I felt like this is something we definitely need to bring to our show and let people know what you do. And you talked about pre-tax investing, and I wanted to know what is pre-tax investing.
Fantastic question. So, essentially, in a nutshell, pre tax investing means that every dollar that you put away into a syndication real estate deal, that you are essentially using um, a big chunk of the taxable dollars that you would have paid out in taxes are included in those dollars. So that's called pre-tax investing. So by writing that check, for example, if you're $100,000 a year income earner, for you to invest $100,000, you have to actually have $130,000 because $30,000 goes in taxes.
Correct.
So, but if all you had was 100,000, all you can invest is 70,000 because essentially 30,000 goes in taxes. But by utilizing these advanced tax strategies that we're going to get into in a few minutes, you are able to have the entire 100,000 go and work for you. Essentially, $30,000 is Uncle Sam's money working for you for free.
Wow. So that's interesting. But how does one do that, and who can do it?
Great question. So let's start with who can do it. You know, the IRS tax code is really written for you to take advantage of it, right? But unfortunately, most of us, 99.99% of the people, get their advice and information through their accountants who are considered the tax experts. But unfortunately, all they are is tax tacticians. They know how to put the right numbers in the right boxes. But then there's this whole world of tax planning that's left out there. And the biggest victims are people who get victimized, and I like to use the word victimized because that's truly what it comes down to, are high income W 2 earners.
Ah,
Because as you know, as a W 2 earner, you have very little availability of deductions. All you can take is standard deductions, right?
Yep.
And then, of course, we will also get into there's a big dialogue on the internet where people are talking about, well, if you're a W-2 investor, let's invest in short-term rentals and Airbnbs, and
Yep.
let's take that income to offset your W-2 income, which is not entirely correct or true. So we're going to delve into that. And then on the other side are the business owners who are 1099 and K1 earners. So the strategies that we're talking about, which is firmly placed in the US tax code, apply to the W-2, to the 1099, and the K1 income earners. Now, the second part of your question was, well, how do you do that? How do you do that? So a lot of the times when I'm engaging in these conversations, people sometimes raise their hand and say, hey, are you talking about a self-directed IRA? Well, a self-directed IRA could be a form of pre-tax investing, except the strategies we're going to talk about today give you current year's income tax deductibility. So imagine for a second, we're sitting here in May of 2024. A lot of you have already filed your income tax returns by April of this year for last year for 2023. But if you are a 1099 and a K1 income earner, we actually have till October of this year to either file an amended return
All right.
or file a new fresh return if you're on extension and literally pay zero income tax for last year from and on your regular job. If you're a doctor, a physician, a dentist, a chiropractor, what have you, and you also have simultaneously real estate syndication income, which is the passive income that's coming in. So how do we do that? We utilize primarily the Secure Act. So I'm going to start with the newest act, and we're going to go back in time to give you an idea.
Okay.
So in 2021, President Biden passed the Secure Act. It really enhanced some of the provisions that were passed in the Tax Cuts and Jobs Act of 2017, which had further enhanced the provisions in Pension Protection Act of 2006. So these three acts sort of stack on top of each other, and we delve deep into it to show investors how the dollars that they invest today in 2024 can be counted as a deduction for the investments made in 2023 to reduce their tax bracket. So that money essentially went in tax-free. Now they invest in your syndication deal. That money now grows tax deferred inside of this tax bubble that we have created using these three tax codes that I just mentioned. And believe it or not, when the distribution comes, it's tax-free, which is incredible. Unlike a self-directed IRA, unlike a solo 401k, when you turn the spigot to take income, 100% of those dollars are taxable at your tax rate. Versus utilizing these three tax codes, we're able to receive income tax-free. So goes in tax-free, grows tax deferred, comes out tax-free, something which is so incredible that we have been specializing in for the past 32 years. And that's where the saying comes from, the rich keep getting richer. Well, guess what? Today, it's your audience's chance to really increase their net worth and their income very quickly.
So that's a very good explanation you gave. But a lot of people are still talking about like, hey, do I get my K1s, cost segregations, and so on? And I'm pretty sure with the Biden administration trying to cut down on the jumbo depreciation. So
Yes,
how can you put some light on that to explain?
absolutely.
Okay.
Absolutely. So pretend for a second, on one side, on your right hand, are these three tax codes, right? That I just mentioned. And on the left side, there are certain provisions, only micro provisions of these tax codes on the left hand, which are cost segregation and bonus depreciation, right? Now, I want you to think of it like big brother versus little brother. So all real estate investors, all accountants, all CPAs, it doesn't matter. I work with accountants in Manhattan and Los Angeles and Chicago. These are huge accounting firms. And despite their prowess, all they're talking about is little brother strategies. So when you utilize what I call the big brother strategies, you don't even need bonus depreciation. You don't need cost segregation and the additional cost that goes with it. Not to mention, one big misunderstanding a lot of people have is that cost, you cannot write off the whole building. You cannot accelerate that on the whole building. You can only accelerate on maybe 40% of the asset. That's it. So if a building costs $1 million, only 40% of that value can be cost segregated and compacted. The other stuff is not even available to you.
Yeah.
So when you truly look at your taxes objectively and intelligently, and not what your accountant is saying or what somebody else may be saying, you will realize that this is what we call an income leak. So although people would say, well, come and invest with us through cost segregation, through bonus depreciation, but even then there's this income leak, which is putting you into the next tax bracket unnecessarily. And we are able to shut all that down and keep it simple. Okay. We want to show investors how they can have all these tax benefits without a risk of audit, right? Because when you utilize things such as writing off operational expenses, taking bonus depreciation, taking cost segregation, there's a huge red flag of audit that gets put on those strategies because the IRS has seen again and again and again that investors and even the general partners who are sometimes leading these things in their desire to pass on maximum savings to their limited partners, i.e. investors, somehow take on much bigger deductions than are legally allowed. But guess what happens when the audit comes? You all suffer, right? So we want to give you the peace of mind, and especially in 2024, where the IRS has just hired 85,000 new agents and have given them guns, which still boggles my mind why an IRS agent needs a gun, right? But these are all scare tactics, and these is, I guess, a government's way of showing how serious they are to come after these types of situations. So we want to warn you in advance because our firm is a registered investment advisor. We are a fiduciary, right? So our objective and goal for your listeners and for your investors is to protect them in every way possible from any potential harm that can come 3 years from now, 5 years, 10 years from now, when they're maybe a little bit older, a little bit more wealthier, and now they're at the risk of losing what they have worked so hard to build over several years with under your guidance.
Absolutely, absolutely. Great, Zach. So let's, no, this is great. And obviously later on we'll talk about, about your company as well. But let's talk about you, Zach. So a little bit about, let's get familiar with who Zach is, how Zach got into this business. And obviously you've been helping people for the past, what, 30 years now?
32 years, yes.
Oh, wow, you don't look that old. I thought you would be like 40 years old, 45 years old, maybe, or a lot younger. But
Yeah,
you've been doing this for 30 years. Wow.
yeah. I'm very fortunate. I had just graduated high school, and I had gone in to buy car insurance at Prudential Insurance Company. And for some reason, the manager who I was trying to buy car insurance from really took a liking to me. And he said, "Hey, would you like to come work for us?" I said, "I have no idea who you guys are, what you guys do. I just graduated high school, literally like 3 months earlier." And he says, "Don't worry, we will hire you, we will train you." And I was one of about 20 individuals that they had hired that quarter. So I was only familiar with those 20 people and not, hundreds of other people that I'm sure the company may have hired. And as we sit here today, I'm the only one left in the business.
Oh, wow.
And what's so interesting is that as I got one license, I said, but how does this connect to this other knowledge? So I went out and got 9 insurance licenses, which is all the insurance licenses there are. There's no more than 9 insurance licenses. Then I said, well, how does it connect to real estate? So I got my real estate license when I was about 19.
Oh, wow.
Then I said, well, how does title insurance fit into all of this? Then I got my title insurance license. Then I got my investment banking license, merchant banking, commercial banking. I got my tax certification. So all in all, as I add them all up, there's about 30 licenses and designations that I have amassed. And because once you amass that level of knowledge, you begin to see the financial world in a fishbowl. You see how all the pieces connect. You see where the dangers lie. You see what CPAs do, what tax attorneys do, you see what insurance agents do, what financial planners do, what wealth managers do. So we have really put together this model. So that's what has led to me being who I am today. And that's why a lot of the ideas and things that I will share with you, 90% of the time, 99% even, I would venture to say, people tell me they have never heard before. Why? Because all the different types of financial professionals that you may have dealt with, they're all technicians. Somebody wants to sell you their accounting services. The other guy wants to sell you trust because he's a lawyer. The other guy wants to sell you life insurance. A stockbroker wants to sell you a stock portfolio. And then you, being a regular person, doesn't, you may be a business owner, you could be a services professional. You are not educated enough to receive all this information from the and say, but who's telling me and how much of what service do I need? So I believe with our knowledge, we have sort of taken all this knowledge, put it in a pot, stirred it together and say, and we can give you exactly in the right dosage what you need. And that's why a lot of the ideas that you're going to hear today are totally foreign to a lot of people. And but nonetheless, they exist in the tax code, and we are happy to show you what those are and have you take advantage of them and join the ranks when people say the rich keep getting richer. This is your opportunity to jump on that train.
Awesome. So, Zach, as you mentioned, I think anybody and everybody, especially I would think it is more helpful for the middle class because they're the ones who actually get screwed most of the time,
That's absolutely
right?
right.
Right?
The
So,
unfortunate truth that is, yes.
yeah, so I think this is really good for those who, I would definitely would like to make another session with you, Zach, and but at the same
Absolutely.
time, would you like? I think middle class would definitely be the more ideal customer for you, I would say, Zach.
Certainly, certainly. We're here to help everybody take advantage of the tax code as long as they are able to be open-minded enough and say, hey, I know my accountant does a type of a job, but what the heck is all this tax planning business? So once you open your mind to tax planning and not just tax preparation, that's really where we can help that type of a person, regardless of the income they make.
Correct, correct. So, how does it what does it really mean to a person a client who comes to you versus when they go to a tax person? All they're seeing is, hey, I gave all my receipts to this gentleman. He took care of all this. He asked me all these, do I have any child support coming in, do I have any other things coming up there, and boom, he just throws out something. He takes a certain percentage of for as his fees. And obviously, when you're looking at the return on investment kind of a thing, because again, you're investing in that CPA, right?
Mm-hmm.
So obviously there is some money that goes into it. What does that mean? Someone coming to you, what is the return on investment for a person like that?
Fabulous question. Fabulous question. Yes. So one thing that we say, that I say a lot, is that our services begin where your CPA services end, right? So many of you listening to this call today, you would probably agree with me that despite your accountant's best efforts, you have to pay him either a flat fee or a percentage of the tax savings that he found for you. On top of that, you still have to still write a sizable check to the IRS, which should be your first clue as to how good this tax preparer really is. Because if you really look at how accountants and accounting firms make their money, they have to service hundreds and hundreds of clients to make their money, right? They have to file hundreds of tax. They have to meet certain deadlines that the IRS has imposed, such as April 15th or October 15th or the quarterly tax returns. They don't have the time or the mental aptitude to understand the tax strategies that are hidden inside of the three tax codes that I mentioned to learn that. So, what do they do to just at least appear they're giving you some tax strategy? So, they talk about, hey, Sanjay, have you invested in a 401k? Have you invested in an IRA? Have you done bonus depreciation? Have you done cost segregation? Have you done the Augusta rule? Do you have any short term rentals that we can use your active income to offset some of the other income? But that is the extent. And these are very simple, basic strategies that are really a disservice to every taxpayer. Doesn't matter if you make 50,000 or $50 million a year, because we deal with a whole range of clients. Primarily, the people that have really benefited from us are income earners making more than $500,000 a year, because they're paying a big chunk of their income in taxes. And especially those who earn their income through W-2, they're getting clobbered until we introduce them to these strategies. So I hope that answered your question.
Absolutely. So basically, what you're saying is, so let me ask you this. Do you suggest that they first come speak to you and then they get their taxes done and then they come back to you saying, hey, Zach, now that I took care of the preliminary side of things, how can you help me?
That's exactly right. So there's two situations in there. Situation A, somebody has already filed a tax return, for example, for 2023 right now. They bring us those tax returns. We see exactly what taxes they paid. We then, and again, this is right now for 1099 and K1 people only for 2023, as we sit in May of 24. We look at the tax, we dissect it, and we say, okay, these are the tax codes that we can deploy to zero out your taxable income, because it's your taxable income that you pay taxes on, right? Situation B, where somebody says, hey, I'm actually on extension. In that situation, we're going to ask you to go back to your CPA or accountant or tax preparer, or even if you do it on TurboTax, give us your pro forma tax return. What is that software telling you your taxable income is? Let us put our specialty tax codes on top of it, and then you go back and refile, and all of a sudden you are able to capture those dollars, which we now call tax rescue dollars, to deploy in real estate investments of your choice.
Absolutely.
Right? So now I had also made a comment earlier in our intro where we said how you can triple your ROI. So think about it for a second. So doesn't matter what your income is. You might make millions of dollars, doesn't matter. We have zeroed out your income tax liability, no income tax. And we can also do the same thing for capital gains taxes also. So now you did not pay an income tax. So those dollars, again, I'll use an example of somebody earning $100,000 a year. So that $30,000 is now with you, right? You're now deploying that cash. So it's pre-tax invested. So that's one level of savings. Now the money goes into a syndication deal. And now that syndication deal gives you, let's pick a simple number of 10% IRR. Okay. So you save 30% going in, you earn 10%, we're up to 40%. Now, if you were not inside of this pre-tax investing tax bubble that we have created for you, the minute that 10% distribution came to you, you would then once again pay income taxes at 30%. Would you agree?
Absolutely.
But because we have utilized and maximized the tax strategies available, you save 30% going in, you capture the 10%, and coming out is tax-free. And you're capturing that 30%. So 30 plus 10 plus 30. How much did you just make on those same dollars? You made 70% or triple your ROI. And triple is really a very low-level word, because as you can see, you were looking to make 10%, but you really actually made 70% on your money, which is mind-boggling. Imagine how quickly your audience's net worth can grow and how much more dollars they can deploy to into other deals.
Absolutely.
So that's how the wealthy keeps getting wealthy.
No, absolutely. And Zach, as I always say, right? At Blue Ring Investors, a lot of people come in and invest in our properties, and obviously, we help help not only with their passive income, but we pretty much help increase their value of on the dollars that they've spent with us. I try to be as strictly SEC compliant as so that I'm
Absolutely.
not giving out any percentages increases that they would make. But obviously,
Mhm.
we pretty much help increase their in the dollars that they've invested, and at the same time they get a lot of passive income. But at the end of the day, earning is one thing, saving is another. So
Certainly.
like if you're gonna earn a lot and then all of that is going in taxes, what's the point in earning all that money?
That's exactly right. Thank you for saying that. Yeah, that is the most obvious leak that people just tend to overlook. And that is where we can come in and kind of plug some of these holes by utilizing these tax codes, which are there for the using. The government, Congress put these codes in place for a reason. You just have to meet and take advice from an educated person who understands these tax codes and to keep you away from tax audits, from triggering what we call AMT, alternative minimum tax, which a lot of accountants unfortunately do not do, because if they did, they wouldn't look like such big heroes anyway. And one quick word of caution, that a lot of you who are dealing with accountants who you believe are keeping you in a very low income tax bracket, I would highly encourage you to go back and get a second opinion on your tax returns, because if your accountant is not doing a simultaneous calculation for AMT taxes, you will have an audit in a very short period of time, between 1 to 5 years. And when you come back to your accountant and say, hey, I have an audit, that person is not going to take any responsibility. And you are going to be left holding the bag and paying thousands and thousands of dollars to a tax attorney to represent you on a mistake. And I would venture to say on a conscious mistake made by your accountant just because they wanted to look good
Yeah,
to you.
got it. No, that was a lot of information, Zach. So thank you for your time and
My pleasure.
educating us. So, Zach, obviously later on when the podcast gets out, we will have your contact information as well as on the video. But if somebody needs to get in touch with you, what is the best way to get hold of you?
The best way I would suggest is that there's a lot of information to unpack for each person's particular situation. So, what we have actually done is that we have created a 1 hour tax consult. We do charge a nominal fee for that, which is fully refundable if we do not find at least $10,000 minimum of additional tax savings beyond what your CPA has already found, right? So, looking at our track record, 99.999% of the time, we're able to put people in a zero income tax bracket, and again recover all the dollars that you have paid in 2023 taxes, or that you are now potentially planning to pay. We can avoid that payment for you and give you the peace of mind that comes from knowing that we also give you the IRS audit guarantee. So I will send you the link that you can post on your website or on this podcast that people can click and schedule a time. Like I said, there is a little payment for it, which is fully refundable if we do not find you a minimum of 10,000 in savings. And for those of you who have paid 50, 100, $200,000 in income taxes, guess what? You just hit the lottery,
Yeah.
because we're going to show you how to recover those dollars. And then for those of your listeners who are W-2 employees, for 2024, we can begin planning now, because we only have till December of 24 to create those tax savings for you on your W-2 income exclusively. So if you are receiving 1099 income through your syndication deals, yes, we can still work on that portion of it, but to really chop down the taxation on your W-2 portion from your regular job, as whatever your job might be, we can dissect that for 2024. And once again, I would encourage all types of your listeners to schedule that call with us, that tax one-on-one tax strategy call, we call it, and really become part of our success stories. We have hundreds and thousands of success stories of people who were blown away that these pre-tax investing strategies exist regardless of your income.
Now, that's great news, Zach, and I would highly encourage all of our investors with Blue Ring, who are majority of them are doctors, and and obviously there are other business professionals as well, and high net worth individuals as well as W-2 investors. I would highly encourage all of you guys to get in touch with Zach and try to squeeze out every single penny that you actually is rightfully yours, And the
Absolutely.
government has put all these things in place, but obviously they had put in not in place for you guys. It was actually put in place for the rich, so that the rich could get richer. But having
That's
someone like
exactly right.
Zach on your side will help you get those dollars back into your pockets. So, Zach, I really appreciate you getting on the podcast and educating our listeners. Thank you so very much.
It's my pleasure. Thank you, all of you listening to this, and I look forward to working with you guys individually and making more success stories out of your tax returns.
Thank you.